The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
So the Fed has come out. We're up 3 points on the S&P cash. Was kind of typing in the den here during the commercial, and I think the market was expecting, on a 1 to 10, 10 being as hawkish as you could be, 1 being as dovish as you could be. I think we got a 5. I think the market was looking for maybe a 7, 8, maybe at worst a 9. So let's say 7 or 8. So it's just a little bit, not a real shock. But the question is, after all these people pounding on the market for the last few days being short, where's this market going to go if you don't get the kind of drive for lower prices? And yes, this has been, people have been about as bearish as they were bullish at the end of January. You certainly had a lot more movement in February coming out of that than you do now, where everybody's fairly bearish. I continue to think that we're going to kind of stumble on up to 2,700, maybe as high as 2,750 into expiration on the 18th of May, which isn't a whole lot. 27. I'd be happy with 2,700, 2,720, just to stumble up there a bit longer and drive everybody nuts, because, man, you just look at it. Everybody continues to pile in on the short side on equities, especially in puts, but also in options too. And something's got to give. Now, maybe it all gives today. Maybe we just rip off 30 points to the upside. I'll be happy now. I just think between now and then we're going to have a lot of people that are short kind of give up. If you've listened to the show for any length of time, I've always said that if you're going to be short, you're going to be a factor of 3 early. 3 minutes, 3 hours, 3 days, 3 weeks, 3 months. And, I think maybe everybody got short about a week ago. And they've hammered onto it. But I think we could see all the way into Memorial Day, the 28th. We come back the 29th. I could see something like that happen. It's a scenario. If we actually start moving on higher volume back up to the levels, then this has just been a big washout. So no real reason to have to make a decision now. I think we're going higher. I have long positions. I've held them. I had some long positions that I got out of. They just didn't act right, but they didn't go down. They're doing fine today. One I got out of just because it really didn't bounce before earnings, but it's up 5% today on earnings. So, I'm not going to cry about 5% on a bounce on earnings. I generally want 10 or 20% to make it worth it. The risk reward. So in the scheme of things, probably a little right, a little bit wrong. I would have been glad to take that 5%, but again, need a lot more. Got some other things going on in the market, but volume hasn't been one of them. We've been kind of trapped down in these lower volume ranges. Just 4 billion shares. What is this at 10 after 2? So, again, not real strong. If we get more than 7 billion shares here, I would be surprised unless we really start seeing some kind of short squeeze develop by the end of the day. But, again, that's problematic because as soon as we got done with the FOMC meeting, everybody's, what are they thinking about? Now They're thinking about going right to earnings tonight. And there's some that probably aren't going to do so well. But the question is, are they so short that they can't go any lower? After the bell tonight, we have Square. Yeah, I don't know a whole lot about that. Tesla, we had, I think it was Bill emailed me earlier to get the data for Tesla. And Tesla has put on a huge amount of shorts. Volume has kind of gone down a bit. But short, it's as high as it's ever been. And one thing, if you really want a stock to go lower, generally high short interest is not that. So could we get a bounce back up to 320 or 330? I think you could, just on the short covering of Tesla, if it doesn't go down. At one point, this company is going down to $40. The question is just how long can you sit on your hands and do so? But I don't know. I don't think earnings are good, but I don't think it matters. These people have bought into the cult. They drank the Kool-Aid, and it's going to take them something like a few people dropping over dead to figure out that they don't need to drink the Kool-Aid either. We got a little taste of it, but not much. Anyway, after the bell, also we've got Fitbit, 3D Systems, FireEye, Axcelis, Logitech, Marathon Oil, MetLife, Apache, Cirrus Logic, FMC, Yamana Gold, Tableau Software, Avis, Rent-A-Car, what else do we have? NXP Semiconductors, Express Scripts, Kulik and Safa, Qorvo, Scientific Games. Got a handful after the bell tonight. Now, we also get into tomorrow morning, but you know what? There's just not a lot going on tomorrow morning. Cardinal Health, Activision Blizzard, after the bell tomorrow night. Universal Display, GoPro, Skyworks Solutions on the heels of Apple's earnings will tell us a little bit. Shake Shack, the recent IPO, Stamps.com, CyberArk, another one in the security, cybersecurity sector after another one tonight. Mercado Libre, Editus Medicine, and Herbalife. So again, nothing really on Friday to speak of. I think is going to move this market. So we're kind of through the biggest part of the storm. We still have some next week, and we'll go to those tomorrow and talk about them. But we're probably tonight is going to be it for earnings. They're going to really move the market. I think the market's going to move on its own accord from now on, at least into next week. And, of course, this is the last day of fund buying. Typically, my guess is that we're going to see fund buying still come in tomorrow morning and maybe here at the bell. That money really hasn't – we had some come in yesterday, but it wasn't all of it. Maybe 3/8 of it. So we got another half of that fund money sitting out there. So we'll see how that happens. Anyway, we're up 3.5 points on the S&P cash. Dow's up 56, the Nasdaq's up 32, and the Russell's up 10.5. We'll be back after this break. Give me a call, 877-927-6648. Email me at path@tfnn.com or put a message in the deal.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we get back, let's do a little bit of history, and then we'll get to Twitter and a handful of others. Email me at path@tfnn.com, and of course you can always give me a call at 877-927-6648.
Then it's all just a little bit of history repeating.
Okay, on this day in 1972, after nearly 5 decades as director of the Federal Bureau of Investigation, J. Edgar Hoover dies, leaving the powerful government agency without an administrator who had been largely responsible for its existence and its shape. Of course, J. Edgar kept files on everyone. He blackmailed just about everybody with impunity. Last couple of years, I've wondered just how far and whether or not we'd ever have anybody again like that. It doesn't seem like it, we had some things that kind of touched on it. I think a lot of people, when you get into that level of power, think about it. And I think some of the news articles make you have to say, in the last few years about what people in power are willing to do to keep their power. But that's it. Anyway, dressed in ladies' clothing, at least they said they did. Some other weird stuff. But guess what? He had all the dirt, and that's all that mattered. There was no firing him. He could take 100 or 200 people down with him at any point. But that's it. Okay, so let's go ahead and start looking at some charts. Of course, pretty weak response to the FOMC meeting so far. We're up 1.5 points on the S&P now. I think everybody's trying to digest it, and as soon as they got to Apple's earnings, they were looking to the FOMC. Now they're looking to Tesla, and the question is, what do they look to after that? There just isn't that much. So I continue to think we're going to kind of stumble up that Otis market all the way through expiration. Just looks like that way again. Okay, so I guess we're going to look at Twitter, one of the true evils of the world, at least the people that run Twitter. Nothing worse than people who are censors, book burners, and of course people that say that you should have kind of an equal footing to give your opinions, and then instantly shut them down. I'm starting to get pretty angry at Fascist Book and Twitter and some of these other guys. They continue. I don't think they got the message out there that the idea is it's supposed to be free and open conversations on their platforms. As long as you go with a party line, you're allowed. I think that's going to eventually all blow up into their faces, because it's going to get half of America to hate them if they don't already. And of course, Twitter, a little bit like that. Facebook, just outright fanning the flames of narcissism. So a couple of good stocks to hate, but hating them doesn't do any good. They move based on earnings. That earnings one day I think will turn south. Not a whole lot to see here in Twitter. This thing is just a big triangle forming from this 36.80 high back down to the lows of about 22 bucks. These things are just going to have to bust out one way or the other. And again, I've never done well predicting which way these things break out. I have done extremely well by fading which way they do. And Twitter's just in this trading range. Doesn't seem like much going on. Let's take a look at its brethren, Fascist Book. This has come up. I think everybody was just far too short this stock. If you wanted to go short this thing, I think we're getting close. You probably want to be right under 185 on this. The volume's been crap for the last 5 days as it's pushed up into this gap down that has 87 million shares. You got to push here. This may even go all the way to options expiration. So I'm not going to be in a hurry to get it. But if we continue to have fairly light volume, like we got about 20 million shares compared to the 87 million on the way down, this thing's going to hit the wall. And, this one, if you get it right, and probably on a $200 stock or close to a $200 stock, you want to be using options. It's just going to make a lot more money, I think, and a lot less risk when you get into these $200 range stocks. But I kind of like it. Okay, questions out here. Okay, anyway, yeah, I mean, this is close. If it wasn't coming up, when do they have earnings anyway? I haven't seen. When is it? July 25th. So that gives you enough time to get going. But I'm thinking the way that a lot of these stocks are setting up, if you were going to get short them, you're probably talking about the day before we go to the 3-day weekend for Memorial Day or the day after, depending on how these set up. I think you could go a fairly long time in May. So I'm more interested not in a specific price, but where the market starts to flip if it's going to. So we'll have to have a light volume all the way up through that Memorial Day weekend. But my guess is that's where we would see the flip on a lot of these. In the meantime, just meander and Otis their way higher. Okay, what do we have out here? Take a look at some other stuff. Had some questions about Apple's buyback. I wrote this in my newsletter, but I will share it with you too. $100 billion doesn't mean they're going to spend $100 billion. In fact, less than 10% of approved buybacks of all the money that has been approved since 2012 has actually been spent on a buyback. Now, some of those have been rather large. I think Boeing is maybe 23 or 24%, something like that. They've actually used a lot of that cash to buy back shares. Apple, not so much. This is an implied put, much like the Fed had out there, and that is that if you go lower, we've got all the cash in the world to crush you if you think you're some kind of short seller. And I think that was the message of yesterday's earnings call. That was to say, we can hold the stock up for a year. We can hold the stock up for 2 years. If you want to be short this stock, go right ahead. It'll go nowhere for a while. And I think we had a lot of people that were short Apple thinking that they wouldn't basically say, I'll double dog dare you. But Apple doesn't have to spend any of that money. If the stock stays up, no problem. If it goes lower, they got lots of cash to push this thing higher. And if it doesn't really go lower, I think a lot of people are going to be willing to sit on it for a while because these guys are sitting on massive wins. If this thing was down $40 and we got this bounce today, I think you'd see a lot of people wanting to sell it. But are they going to just burn $100 billion in cash buying back shares? History says no, and I think they'd have to run into much bigger problems to do so. It is a threat, not an empty one, but one that they do not have to carry out. We'll be back.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll go right to the email. And to see what Rob in South Carolina says, looking at the SMHs as a possible buy here, according to the Market Watch, the float is 148% short. Not sure how that's possible. Appreciate any thoughts. Well, it isn't possible, although it kind of is, but it isn't on this. You'll find some penny stocks where people have actually shorted it beyond the scope of the actual shares possible, but they have to cover those in 3 days, and then you normally find somebody that sticks it to them. All you have to do is go in and buy one share at that point, and you're going to make the stock go to the moon, because all they can do is short more, which they probably can't get. They probably had the SEC guys already on their back saying you have to deliver in 3 days. So generally, you know, it's kind of like a HLF, that whole last 2-year thing in Herbalife, where the old bull was able to stick it to the young bull over a matter of years and stick it to him. It didn't really matter that the stock was, the company was kind of horrible. It was all about moving dollars around for the most part. But it is not. Now, when we do look at the SMHs, let's take a look and see actually what's going on here. I probably need to make this interface a little bit more user-friendly. But the short interest on this thing right now is what? About 18 million shares. And for some reason, I don't get the short percent of the float. I think that's why you see that thing, is that they, since the open float changes so often, you don't get that, and that's why the numbers don't come up. But if I look at this, I'll tell you about how many shares have been short for a while. Back on the middle of February, what is it? Is that? About, is that 2.1 or 2? Man, I gotta think. Okay, 21 million shares short, the SMHs. Middle of February, we go to the end of February, you got 17 million, 18 million the middle of March. The end of March, we had 16 million. Now we're back up to a little over 18 million shares short. So it hasn't really stopped. The other thing we can look at is the FINRA data each day. And well, 2 days ago, we had almost 19% short originations. Yesterday, 7.5%. Today, or actually yesterday, 13.5%. Day before that, 7.5%. And then the day before that, almost 19%. So we had in that dip, everybody in the dog throw short, which is a pretty good signal. The other thing that we can look at is the sector oscillators, and we kind of got two sectors that have kind of started showing. Do I have it here? I do not have it here. See if I can actually do this while live on the air. Sector oscillator. Okay. The defense stocks kind of have hit their theoretical low. Everything's below the 9-day moving averages on them. So when we look at the ITA, this thing's probably within about 2 or 3 days, 2 days probably by now, of finding some kind of low. So that's one sector out here. And now let's take a look at the SMHs, which I think are the other ones. Now they've kind of already done that. Where's my little SMHs? There we go. And we'll look at that. This one already made it. And so you're probably well on the road out here to getting what you're going to get out of the SMHs. I already went long something in this sector back when this thing was finding a low back here on the 20th. Is it the 20th, the right date? I think it was. Could be. So I think it was in that 20. Yeah, I think it was the 24th. So I bought options in one of the SMH companies. Now this thing's kind of starting to move higher. You get about 7, maybe 10 trading days while these things hang at the highs. But generally at the lows, you get 2 or 3 days and these things turn around. So I'm kind of looking for this in the ITA. You've probably missed, the train's already sailed on a lot of these SMHs, and especially what these things look like after Apple today when we close the books on these tonight. So I would think that maybe you have to find another stock. Let's take a quick look at the SMHs today. I mean, they haven't really moved that much this far. That's the big problem with them. Pretty light volume out here today. My guess is that you're probably looking at 104, which isn't a whole lot if you're out here buying in the 98s. And that's still 6 points. But you know, I'm not a big fan of playing for 6% on an ETF like this. It can move against you fairly quickly. I like to see 10 or 15 or 20%. So I would have had to try to buy this gap down at 95.47 and been long then. And then you may have had a chance to make some decent money on it. Here, it just seems like it's kind of, that horse has kind of left the barn a little bit already. So we'll do that. Yeah, the text is very small for that. But, of course, I use it. It's not something I normally put on the air. I have in my newsletter Excel charts or Excel's spreadsheets that I put in, and they size just perfectly with the newsletter. So kind of a little different thing out there. But anyway, yeah, all these sector indicators are kind of saying a few things. Let's take a look at the XLE today. Not the XLE is going to pull back that much, but we've gotten some fairly decent confirmation that these things have at least hit some of their temporary highs. Let me find this one real quick. Where is that XLE? There we go. So this XLE spent about 5 days up here at the highs, and as you can see, when this thing started to move down, you got maybe one decent day higher, and then it's kind of rotated off. That doesn't mean it's going to come back to the bottom, but it does tell you that probably the next time that the XLE's a buy is going to be, you know, going to be maybe another week or so. Now, it doesn't have to pull back that far. In fact, you'd love to see that. You'd like to see the sector oscillator pull back and go down fairly far, and the stock, the ETF, not pull back very much at all. And that would be the divergence to set up an ABC to go back up to the 78 level that we saw back in January, if you're thinking so much. But we need a few more days on that. Like I said, there's some sectors that are moving. If I'm looking for a bounce, it would probably be in that ITA, the defense sector. And again, a bounce. It's come down fairly hard. But a lot of these sectors that were running well, like the XLE, they need to take a little breather. We'll be back after this.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're up 2 on the S&P. Dow's off 5. NASDAQ's up 18. Russell's up 12. So, kind of a mixed bag out here. But again, 50 points, we were able to do that in one day. I think we could spend a week or two going up into that 2,700, 2,750 area. So don't be surprised if we have the new normal, which is, 2 steps forward, 1 step back, or maybe even 3 steps forward, 2 steps back. But we've got a lot of short people on this market, and I don't think that market's going to go down, which generally means a slow slide higher, especially when volume starts to break lower, which it will now. We're going to be getting into summer trading, and that generally means that there's too many people short for the conditions in the marketplace. And that's why generally you see a lot in history, you see a lot of highs in the market that start getting sold in that Memorial Day time frame. So the more I look, the more the way sets up. That's kind of my scenario right now, and it could just bore you out to tears. And like I said, you're going to be a factor of 3 early, and my thinking right now is at least 3 weeks, which actually only takes you to like the 21st or 22nd. But I think you could go into that 3-day weekend with very light volume all the way up and have a lot of people screaming and just have the shorts get out. But I'd say 80% of the time when the markets fail, it's when the shorts give up. And I haven't seen that. We've seen people continually pound in this market, either through shorting the equities or buying massive amounts of equity puts in the market. As I said yesterday, I think that the best idea about why everybody in the option market is expecting the S&P to go higher and buying protection on every equity to go lower tells you something about that. Now, the theory is, or at least the working theory is, that people are either selling those puts as covered puts and or a lot more a bullish strategy by going short puts. And that's kind of, I think, what's happening. That's the best explanation. You really don't know on the other side. The option market makers certainly do. And these guys didn't blink at all of thinking that Apple would at least be around 170 bucks today. It actually went a lot more than that. And I'm thinking that maybe a lot of people were thinking maybe a $50 billion buyout would probably be big. I think they just wanted to make a statement. And my guess is that they won't buy any shares for a while. This thing will just hover it up, and anybody short will always be fearful that Apple will just come in, dive in, and run the stock up 10 bucks. And it doesn't take much, and they've got all the money in the world. Yeah. I think a little people in the den talking about a lot of geopolitical risk. And I think that it's been the boy that cried wolf. We've had 100 of these things, and none of them have come true. I think a lot of people are starting to lose any kind of belief in the media. They keep saying all this stuff, and it turns out to be untrue or wishful thinking, from CNBC to the rest of the cable news outlets. Doesn't seem to be a lot of truth to be had. You just never know. I just don't think people are paying attention to it anymore. Maybe they will if something actually happens, but my guess is that nothing will actually happen. You know how politicians are. They just like to talk and talk and talk. Okay, what else do we have going on out here? We wanted to talk about earnings out after the bell, so let's try to get to some more of those. And see, where is it at here? Okay. We talked about Tesla already, so let's go ahead and look at some other ones. Got a question to look at Square from Steve. Steve does not say where he is from. Again, these triangle patterns, this one did try to break out a little bit to the downside, but basically pop back in one day. So, if you get a big surprise, I would fade the other side of this. This is another one out here that looks like it certainly could be faded. And the first move out of these price ranges will probably be the head fake. What else do we have? Tesla, Fitbit, Logitech. I haven't looked at this for a while. LOGI. I mean, I use a mouse of theirs. I use a webcam of theirs. I've got some keyboards of theirs that I'm not using on this machine. This thing's another one that's kind of all wound up around this $37 to $38 price range. I think a lot of these, if they do come out with earnings, are going to probably pop. And again, probably want to fade the first move in this over the next couple of days. Cirrus Logic is another one tonight. Crush, or was that from last night? Yeah, just a little doji out here today, pre-earnings. This gap down on the 19th of April did so with 2.6 million shares. You're back up into this gap with 1.6 million shares as we speak. So could we get close to that? We could. A lot of these SMHs, like I said, I don't know how much there is on the upside, but it certainly looks like they want to go at least slightly higher for a while, and I think into fun, a little bit of fun buying here, probably in the last 30 minutes, and probably tomorrow morning. We'll put the end to fun buying to rest. Tesla, Tableau Software, which is symbol is Data, D-A-T-A. Again, this thing's been really kind of going sideways since the 17th. He had one spike down and lower on the 25th, and it's right back out here. These things have been, this company's been doing extremely well. We talked about what they do before, which is make dashboards for CEOs so that they can hit a button and see everything going on at their company almost instantaneously, which they like. Let's see what else is out here. Apache in the energy patch. See if there's anything going on this one. Came off its highs at 43.37, the April 18th high. It's pulled back a little bit, but there hasn't been a lot of juice up today on a little bit of juice. Resistance comes in at 44 44.50 and 46.50. This thing didn't have all the juice in the world from March 2nd up to that April 18th high. It's pulled back on interesting volume, but I don't see a lot in that one elsewhere. Avis rental cars, of course, with Uber now, these things have had problems, but it's actually come back and done fairly well. Now, going into earnings, this thing has done nothing but go sideways since the mid to late April timeframe, actually March timeframe. So, you know what? I think we're loaded for some surprises after the bell tonight. Yeah, we'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And yeah, somebody in the den going talking about Frontier, which took over Verizon down here for internet service. And the company looked like it was dead. It's back from, but I don't see anything else here other than they had some decent earnings that look like maybe they're turning things around. Had a lot of problems taking over the Verizon business down here and elsewhere for their old Fios service. But no, that's interesting. Okay, now the one that I'm really looking at after the bell tonight to tell us whether Apple is an aberration or not is Qorvo. This is a company that is a conglomeration of a lot of the smaller companies in the smartphone business. They make RF devices and a lot of other things. I think it was RF micro devices and 2 or 3 others that all ended up getting together. This is back up to the highs of mid-April. You got some pretty decent volume today going in. You got 2 gaps above it, 76 to 78 and 80 to 82. But I don't know. I think business is still good in smartphones. Maybe the growth is over, and maybe that's what everybody's so worried about, is not the fact that these guys are doing less business, but that the days of these being super growth stocks are over, and you're more interested in whether these guys can deliver some cash flow. Anyway, Qorvo out after the bell. That's QRVO. Keep a look at that one, because this is one that isn't real sexy. It isn't your NXPI or one of the other ones that everybody's talking about, but I think it gives you a good read on what they say about cell phone sales going forward. Will be very interesting. In the meantime, sell when you can, not when you have to, and we will see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.